The most common question we get is, can we see your investment portfolio?
We're breaking down what stocks we invest in, our three other investment channels, and how our $1.6 million portfolio has changed over time.
First, let's take a look at our stock market portfolio. This accounts for about 54% of our total investment portfolio. This breaks down into 92% ETFs, 5% individual stocks, and 3% other. So why do we invest into so many ETFs? Well, we follow a simple strategy that you hear in most personal finance books, and that's invest consistently, invest as much as you can, as early as you can, and stick to boring and long-term investments, which are ETFs. An ETF stands for exchange traded funds, and it's pretty much a basket of investments, usually stocks. The S&P 500 is the 500 biggest companies in the US. And an S&P 500 ETF is like buying a tiny portion of all those companies all at once. So instead of buying into one stock like Apple, you're buying into a group of stocks all at once. ETFs are great because they are low cost, they're diversified, and historically they deliver solid returns. Over the last 150 years, the S&P 500 has returned on average 10% per year. When you hear people say, oh, just invest $100 every month and then you'll retire with $1 million, this is what they're referencing. They're referencing index fund ETFs, more specifically the S&P 500. And in Canada, we invest into an index ETF called VFV, and it tracks the S&P 500 in the US.
So I also still have some money under robo-advisors, partially just because we haven't fully moved it over. If I'm being honest, it scared me a little to move them all into our own self-managed. But after I saw the growth that Josh generally had just having his money in ETFs, it really did inspire me to make my way from the robo advisors, the robo managed accounts, and move more of it just into our own ETF management. But I do still have a little bit because I was nervous about that switch. With robo advisors, they're kind of like making their own baskets of investments for you. And so that can include index funds, government bonds, gold, and cash is usually like some version of that combination. So we also have a little bit of that in the mix because I still have some of those robo advised accounts. They generally have a split of 85% index funds, 12% government bonds, 3% gold, and under 1% cash, making up that other portion we talked about with our portfolio, around 3% of it.
The last part of our stock portfolio is individual stocks, which accounts for about 5%. People invest into individual stocks to try and win big, find that next hot stock. Investing in individual stocks is a lot more risky because you're investing into one specific company and the performance can vary depending on what the CEO does, what the economy does, which means it shouldn't be a large portion of your portfolio. For us, it's only 2.5 of our total investment portfolio and only 5% of our stock market portfolio specifically. For us investing in individual stocks, how I see it is, we're trying to squeeze out a little bit more return, and we understand that there is higher risk, but to mitigate that risk, we invest into companies that we understand. We invest into companies that we use daily. For example, like this laptop or my cell phone, they're both Apple products. I use Google every day to search stuff. We go to Costco to get our groceries. We order from Amazon. So we invest into all those individual stocks as an example of how I would use that as a criteria for individual stocks. And the stock that I'm trying to make it big off of and make a lot of gains is Nvidia. Like AI has been pretty hot right now, and to be honest, I'm getting FOMO and I don't want to miss the train. So I put a little bit into Nvidia, hoping that it will provide really good returns, but at the same time, it's a very small portion of our investment. So if I just lose it all, it's okay with me. After looking at our returns with individual stocks, it pretty much has been similar to ETFs. And in the beginning, I wanted the individual stocks to try and get me ahead and get me to that next level. But after consistent contributions into ETFs, I just see the true power of compounding interest and how ETFs is the way to go. And to us, we're not that passionate about any individual stocks, really. So I think Going forward, we're not going to do too much more about individual stocks and keep contributing to index fund ETFs. And honestly, if individual stocks stress you out, you could just skip that part and you'll be fine with just ETFs.
As self-employed individuals, we invest both personally and through our corporations. So that breaks down to about 60% in our corporations and 40% in personal accounts. Essentially what we do is we pay ourselves enough personally so that we can invest personally and max out those personal tax advantage accounts that we have here, to pay our personal expenses, and then also to have an on-paper salary that's essentially good enough if we want to buy or take advantage of a real estate opportunity. If you want more info on what that payday routine looks like, go ahead and watch this video here. But that keeps our personal spending to a minimum, which is really nice. It lets us focus on getting those investment contributions up, and it allows us to keep investing through our corporation. Take it from someone who started out really nervous investing in the stock market. The best thing you can do for yourself is just start and get those reps in. We kind of think of it like working out or posting on social media. If it's something you know you want to do, the sooner you start, the more you get that practice and the more that experience is going to teach you, and you'll just get more comfortable with it. I kind of feel like, yes, with investing, there is a risk of your portfolio dipping under your initial contributions, but for the most part, I would say the worst case ends up being that you learn something a little bit down the line in your investing experience. You realize, oh, maybe I could have been doing something earlier that was a bit more strategic, but that's usually like the worst case scenario. What I've realized is the best case scenario is you have so much more financial literacy and you have so much more security for future you. Even though we've contributed over $700,000 into our stock market investment portfolio, we have over $1 million in that fund, which means we got like $300K for free. Do you realize how great that is? I'm pretty stoked about that. And that's mostly just from investing in these boring funds.
When we first started investing back in 2020, our portfolio was about 32% of our total investments. And after 5 years and focusing heavily on contributions and getting that up, our stock market portfolio is 54% of our total investment portfolio, which we're very happy about. From investing our first $70,000 5 years ago to now having over $1 million in stocks. And then we have crypto. We treat crypto like gambling. High risk, high reward. We only invest in crypto what we're comfortable losing because we know how risky and volatile it is. Again, I'm learning. I'm a FOMO kind of guy. I don't want to miss the boat. I just want to be part of everything. I started to do some research and I got to know that crypto was more than just a meme coin, and certain coins like Ethereum actually had tech behind it, actually had use cases that we could see being used day to day in the future. It wasn't until we got a second opinion from a friend of ours who's heavily in the space. After meeting with our friend, it made us feel confident enough to decide to dive in, and we invested because of that conversation. But at the end of the day, we still take full ownership of it, and we know the risks of crypto. When we first invested, I invested about $10,000 to start, and it was hot, so classic FOMO me, I kept investing more and more. And at most, I think I've invested $17,000. And at the peak of my balance, my crypto almost doubled. It did double. It went over $40,000 at one point. But then in the span of a few weeks, it went back down to around my contribution amount, which is about $17,000. And that is where it's currently sitting, which I'm okay with. Even though crypto is very volatile and the price has come back down to what I originally contributed, we're still keeping our money in it. We're not experts by any means, but we're happy to be in the space and continuing to learn and grow as it does as well.
So far we have covered our stock portfolio, which is 54% of our total investments, crypto at 2%, and that leaves us with 44% left to go. And 42% of that is real estate. We currently own 3 properties, 2 with long-term tenants and 1 short-term rental, aka our cottage. If you're curious about our real estate investing strategy or have any questions about real estate investing, let us know what those questions are or if you want us to make a whole video about it. What I think is really interesting is real estate used to be 68% of our total investment portfolio, and you may think that means it has decreased in value or, completely flipped spots. Maybe we sold something. But what's really cool about it and exciting for us is we actually have only seen that value go up and our equity in real estate go up. And it's just that we've been contributing so much in the stock market that we've been able to have more of the stock market side. In fact, our total value with real estate is now over $2 million, 2.115. I always struggle with how to say millions. And our total remaining owing is around 1.4 million, which makes our current equity just over 700,000. So why real estate? For us, we really love having more of a tangible asset. Josh was just talking about crypto, which is maybe as intangible as you can go at the current moment. And real estate is a nice tangible asset, especially since we are both self-employed. It feels like it gives us just something more concrete. We're both in very fluid industries, and so having those investments feels good to us. It also means we're more diversified, as we see the stock market can have often years at a time with lower returns or maybe even dropping into a negative. So we just like knowing that we don't have all of our eggs in that basket. Having 3 different real estate properties also means we do ultimately have an option to sell something if we needed to. It's not part of our current portfolio strategy, but I like knowing it's a backup, especially being self-employed or if we just decide we want to go travel the world and want some cash. And one of the coolest elements I don't think people talk about enough with real estate is how much it allows you to be the bank and access more cash, really. Whether that's taking out a home equity line of credit or refinancing one of your properties if they've gone up in value. We've looked at this and we've done this previously to keep the mortgage payments similar, but actually get some cash that can be used for investments or maybe even to reno one of the properties to up its value. Real estate is something we've always been passionate about. It's a big reason Josh even got his real estate license. And for us, it's something that's more close to home. So it's always going to be a comfortable space for us to invest. And we're definitely thinking about adding a property or 2 to our portfolio in the next few years. Personally, I think real estate gets a bad rep for being unpredictable because a lot of the times we're headline readers, and real estate's only making the news when it's on either extreme. With Josh being a realtor, it keeps us close to what's happening in the market, and our properties are all in really great developing areas that we're confident that those values will remain. And even though there is that risk that yes, real estate has some up and down, it is something we're close to every day. So it allows us to stay more in tune versus someone who maybe purchases a real estate property because somebody told them real estate is a good investment and then later feel burned when that neighborhood or the market changes and their property is no longer worth what it is. So we feel confident in the predictable growth as we continue to pay down our properties. It is one factor for us that feels more predictable of we know how much more equity we're going to have in each property 2 years from now, 3 years from now, 5 years from now. And even most recently, one of our properties just went up about $100K in value because of a recent sale right in our neighborhood. So that's cool for us to have that moment of growth, especially when something like the stock market isn't giving as sexy numbers right now. So whether it's real estate or something else, diversification can be really important to make you feel more secure and also have those exciting wins when another aspect of your portfolio isn't doing as well.
Now that you've already seen 98% of our investment portfolio, the last 2% is angel investing. And honestly, it's kind of surreal to say that we're angel investors. It's one of those things where when you think of an angel investor, you think of like the big dogs, like the big sharks, like Shark Tank, Dragon's Den, and the people who are investing millions and billions of dollars. It wasn't really on our radar, to be honest, but a mentor of ours brought up an opportunity to invest in a company, and we went for it. Looked at the numbers, learned a little bit, but to be honest, we were very new. We felt like it was a really comfortable position and comfortable situation where we could try it. When I talk about getting the reps in, we reviewed a contract, we looked at different structures for angel investing, and we even opened up a new corporation that will help with all our other corporations. And we wouldn't have got to this point if we didn't decide to do this angel investment. Now, it is also very risky. Maybe 1 in 10 angel investments really make it big. You could 10x your money or more And 90% of the times, or if not more, you might just lose your money. And we're fully aware of that. We'd love to one day have our in-betweeners community create a syndicate together where we all come together and invest in different projects, businesses, and even real estate. If that's something you'd want to see, let us know in the comments below and other thoughts around it. We'd love to hear from you.